This is brutal. So I'm excited. People are all nervous about the stock market. It's going down, it's going down, it's going to crash. Well, the way I look at it, discount city. So, as many of you know, I liquidated my portfolio not too long ago due to the extreme volatility with the political situation. I mean, Trump, I was doing really, really well last year. Portfolio just going up and up and up and up and up. I mean, I made some really awesome buys. Things like I jumped on board with, I apologize, um, Boeing. So Boeing was having a tough time. I knew it was a temporary thing. So I bought Boeing and I bought it when it was down, struggling, and then it started recovering and I sold it on its best day. Like it was having a tremendous day, it was going up. And that's the thing where you want to be successful with trading, you've got to put the emotion aside. And that's exactly what I did. I went in there, I got a lot of solid gains. And, I said, let me not be greedy. I got some good return on my investment. Now it's time to bail out. Buy low, sell high. It was really high considering the price I bought it for. So I sold. I think within a day or two, it tanked. All right? Got to keep the emotion out of it. Anyway, so what's happening right now? Let me tell you what my perspective is and what I'm about to do and some things for you to think about. So, a lot of stuff going on. We got the coronavirus. People are saying there's also the political element. Whatever it is, the market is tanking and we have broken some records. Not good records, but bad records, right? This is, in terms of the largest losses in a single day. I mean, it's just been absolutely brutal. So, I liquidated my portfolio, as I said before, and I just did a wire transfer yesterday. Moved pretty quickly, and I opened up an investment account with J.P. Morgan Chase. I was previously using those idiots at Robinhood. Yeah, really, really awful service. Do not use Robinhood. I mean, it's great that it's free, but now that we have all these other companies that are offering free trades, Robinhood, I don't miss you guys at all. So I liquidated the portfolio and I still have the account, but I don't use it for anything. So I opened a JP Morgan account. I wired some money in and the money was available, I think, within the same day. So pretty smooth process and nothing major, just a few thousand, something small because right now it's a very sort of it's a tricky time to be in the market because we're overdue for a crash. Now, every 4 to 7 years, we're supposed to have a crash. Just this is how the market is designed. And when I say market, not just the stock market itself, but the economy in general. There's a lot of problems with our economy, a lot of problems with the stock market, and those problems lead to these cyclical patterns that we see where we can have these great times and then things crash and then they come back and that's just how it is. So the general pattern is I think 4 to 7 years is as long as you're going to see sort of good times, right? So somewhere between the 4 to 7 years is where you would normally see the market reverse. So we're overdue. We're like over 10 years at this point of the current expansion that we're in. So it's not a matter of if the market's going to crash, it's a matter of when it's going to crash. So, with that being said, why would I buy something now? So, right now, with the market dropping so rapidly, and a lot of it has to do with emotional stuff. People are looking at this corona stuff and what's going to happen and we're all going to die, blah, blah, blah. They're looking at what happened with China and now, it's spreading across the globe and it's really hurting certain businesses. I mean, you have tech companies that are doing manufacturing or whatever in China, and they're really being hurt. I mean, a lot of supply chains are coming through China, so that's definitely affecting a lot of different businesses across the board. I mean, 3M was an interesting one. I don't know if you guys watched 3M, but 3M went down with everyone else. And then, as I think the last few days, they started spiking like crazy. Everything's down, 3M's up. But you're like, of course 3M is up. They're making those masks, right? But they were always making a mask. So when the coronavirus first came out and people needed masks, they were going down like everybody else. So why are they going up now within the last few days? I don't know. But anyway, my thought process is, obviously it's a discounted market because everything's going down because of what's happening. So that means potentially a lot of stocks are going to be undervalued, right? They really are worth a lot more, but because of all the negative publicity and all the craziness going on right now, the zombie apocalypse, the prices are going to be low, right? So because I feel that these prices are not what they should be, it's just a matter of, again, people responding to what's happening. That means they're going to return to what they should be, right? And it shouldn't take that long for them to recover because the market, tends to rise. That's what it's been doing. That's what the sort of the pressure is to grow and continue going up. So there's going to be a resistance to this sort of price correction, and that resistance is going to push it up to potentially push it up to back where it should be. So what that means is you can get some stocks right now pretty cheaply, and within a few weeks see a major return, and then you can bail out with your profits before it dips again. Or you can go a little bit longer haul, and maybe this whole pandemic right now with I almost said Ebola, with the coronavirus, maybe it takes a few months for it to kind of blow over, because there's gonna be a period of time like right now, a lot of misinformation. People are really panicking. Oh my goodness, what's gonna happen? We're all gonna die. I mean, it is pretty serious. It does warrant you paying attention, but there's always going to be with situations like this people that are going to overdo it. So we're not all going to die. I don't think it's on that level. It's definitely not the worst we've seen so far. But again, it's something worth paying attention to. But bottom line is, with a ton of people probably overreacting, once they settle down and realize, it's not a big deal, it's not so crazy. We got a thing under control. The mortality rate's not that crazy. China's starting to recover. So as people start to realize that, the prices will start to recover, and you could see some significant gains. Because again, the big way you want to make money is you want the largest sort of range in terms of you bought at this price and you sold at this price, in terms of the difference, the delta between the purchase price and the price that you sell the stock for. So let's say right now a stock was at $100 a few weeks ago, and now it's down to $70 or whatever, but it was a $100 stock. So if things recover, it could very well go back to 100 and go even higher. So you could make a lot of money from that. I mean, 70, 80, 90, I mean, $30, right? That's $30 right there, $30 per share, depending on how many shares you purchase. That could be some quick money. However, I will give you this warning. Because we are overdue for a crash, this event could very well be the catalyst that pushes us into the crash that again, we were overdue for. So recovery may take a long time. And when I say a long time, a year, 2 years, 5 years, or even longer than that, right? So if you're going to try to take advantage of what's happening right now, you've got to realize you can't just focus on the corona stuff, right? Because again, we're overdue for a crash, right? So Some people have been greedy and sort of riding the market up. It's like, I know it's overdue for a crash, but look at the market. It's going up. Record days is going up. All this money, people are making so much money. I got to get in on this, right? So they get that emotion, right? That's what I stepped away from. I saw the market and I watched all the gains, but I stayed on the sidelines, liquid, right? Completely liquid. So there's people who, because of their greed, they've been riding the market, but they know they're on borrowed time. They may look at this. I have a strong feeling a lot of people will look at this event as, you know what, I pushed things too far. I really shouldn't have invested. I knew that a crash was coming, and now this is happening. Since the market was already on borrowed time, this could be a catalyst to a major crash, even worse than what we're seeing now. So I want out, right? Because I knew I was on borrowed time, right? So this happening doesn't help matters. So this may be the exit point for a lot of people who were looking to exit anyway. They were just trying to, play a game of chicken. I'm gonna try and get as much gains as I can while the market's going crazy, and then I'm gonna dip out before it crashes. Then this happens. It's kind of like, oh man, I guess I went too far. So I'm gonna go and sell everything, and I'm done. I'm done until a while, because I'm gonna wait for a full crash, and then wait for a full recovery, and then start paying attention and looking for an opportunity to jump back in. So with that in mind, you've got to consider that this could be phase one of an eventual crash, right? So things go down now because of Corona, and a lot of people take that opportunity to exit the market, anticipating a crash, not because of Corona, but the crash that they knew was coming anyway. And they're just like, you know what, let me get out of this thing now, and let me stay on the sideline. So a lot of cautious people are going to dip out, and by doing that, they're going to further make the prices go down even more. And then we could push into a recession, and this could be, again, a years long process, right? So jumping in now, taking advantage of cheap prices, you could be in a long haul in terms of, your account. Even though you bought at a very low price, it can go much lower, and then you can end up being in a negative for years, right? So as usual, don't invest more than you're willing to lose, right? And that's my perspective. I'm putting the money in, a few thousand, and I am ready for, to take a big hit, potentially. I don't think I will, but I know there's a good possibility I could. So this position, let's say I put down 3,000, I could watch it go down to 2,500 or 2,000 and never get back to my purchase price for years from now. But that's the way it works. You want the gains, you got to take the risks. No risks, no rewards. To get the highest potential gains, you generally have to take the highest potential risks. So I'm willing to risk the money because I don't need it, and the potential significant gains are worth the risk to me. So that's where I stand. So what am I going to do? Friday, I'm anticipating is going to be a really bad day. We've had several bad days, so maybe we're already pretty low and nothing really is going to happen on tomorrow. But I think Friday's going to be a bad day because things are really shaky right now. You got to think in the mindset of traders and investors. You don't know what's going to happen next. We got an idiot for president. He's lying to people and telling them everything's okay, and he's trying to silence the scientists. I mean, this is not a good look. So with that being said, with the equities markets being closed over the weekend, a lot of things can happen Saturday, Sunday. Imagine something major happens Saturday, Sunday, and you can't do anything about it. Some major event that further pushes things down, and then come Monday morning, the opening price is much lower than the close tomorrow, right? So that would mean you would be sitting there over the weekend watching your positions. Well, I mean, no trading's happening, right? But watching all the negativity happening and realizing that come Monday, you are gonna take such a beating, and there's nothing you can do about it until Monday, right? So many people are gonna wanna, you know, people who I just think that there's gonna be many people that are gonna look at that as a exit opportunity. And they're not going to want to take the risk. They're not going to want to ride the weekend and see what happens on Monday. A lot of uncertainty. So if people haven't sold yet, based on tomorrow potentially being a bad day, I think even more people are going to sell, right? But that's good for me. I want the discounts, right? I wanted to go down. Bring those prices down. Sell, sell, sell. Bring it down because I got to pick a nice entrance point, right? I want to buy as low as I can. I want the biggest, deepest discount I can get. So that's why I'm thinking Friday is a great opportunity. And what I'm looking to do, because there's a lot of restrictions, I can't do a lot of trading because I get a conflict of interest with customers and clients. So what I am looking to do is I want low maintenance. So I can't be as aggressive as I potentially would want to be. So I want something more sort of safer and more hands off. So index funds. So I'm looking at like an S&P 500 index fund. So something that I want if the market comes back, I want to profit from that recovery as opposed to me investing in a particular company and I feel like this company is a great company. I think they're going to do great, and I'm just going to put my money there and hope. You know what I mean? Like that's just maybe that company doesn't do well. I'm riding the market. I'm with the market, right? So if the market recovers, I'm gonna make a lot of money, right? And that's my idea. Obviously, if the market doesn't recover, I'm gonna go down with the market because I'm hitching my boat to the market itself by purchasing index funds. So that's my idea. I'm gonna since S&P ETFs are not I don't have any disclosure requirements, so I can pretty much purchase them without putting in a request through compliance. So I am going to um, maybe at the close, because I'm thinking Friday's gonna be really bad, and then based on that, Monday's probably gonna be pretty bad as well because if Friday closes pretty low, then whoever didn't get to sell, and then whatever happens on the weekend, they're gonna definitely want to sell on Monday. So they'll probably do like a market sell or something like that. So as soon as the market opens, a bunch of orders are gonna trigger, and maybe things go even lower. So I think potentially, if not market on close tomorrow, it's hard to predict what's going to happen on Monday. I would say take a look Monday morning and see what the indicators are in terms of what the anticipated open is going to look like. If it's looking positive, then maybe do like a market on open and just jump in. Because I'm not a day trader. I don't have time to be sitting watching stuff. So I gotta pick a point and jump in, and then just stick with it. So if things are looking positive, probably do a market on open order, and then I'll ride it out, man. I'm ready. I'm ready for this to be a months long thing. I don't think I'm gonna sell anytime soon. If the market continues going down lower, I'm definitely gonna just let it sit there. I mean, we took a big hit already, so. But also, you got to consider. Here's another factor: the market was already really high and perhaps very overvalued, right? Because it was just spiking up and going up so sharply. So when that happens, you have momentum trading where people are just following, the momentum. They see the market's up. Let me jump in. I'm gonna get in on this action. So the price ends up going higher than it should. So that means if the price is already higher than it should be, and now they drop because of Corona, then even after the Corona, hysteria dies down, they may not go back to where they were because perhaps where they weren't supposed to be in the first place. So you have overinflated prices that get checked by this negative news. And then when they settle down, they don't go back to where they were before because they weren't supposed to be there. So that means even though I'm buying, quote unquote, low relative to what the prices were, they may still be a little bit high. So meaning, let's say it starts recovering, but I don't get much gains because the prices don't go anywhere near where they were before because, again, they were perhaps overinflated. Or I may feel like I bought a really discounted price, but the price was already overinflated. So my supposed low price could actually be potentially high, and it can fall even lower, right? Now, if the market was more normal and the prices were more respectable in terms of like this is a reasonable price, it's not overinflated, it's not going crazy, then I could have more faith that prices may return to where they were. But due to the fact that the market's been doing really, really well, I think in your mind you might wanna lower the prices in terms of what they should be. So instead of buying $100, something that was $100 at 50, thinking it's $100 stock and expecting it to return to 100, think that it may not be $100 stock in the first place. So a few weeks ago it was $100, but maybe it was overinflated. So maybe it's actually an $80 stock, right? So if you buy an actual $80 stock that's trading at $100, right, expecting it to go back to $100, you might be sorely mistaken because, again, you bought an $80 stock, right, that was trading at 100 thinking it's a $100 stock. But if it's really an $80 stock, when it falls to 80, it's not really low, it's where it needs to be. So unless the market sort of gets back into a real good groove again, the price could just hover around what you paid for it. And again, since we're due for a crash, the tendency for it to go lower than what you paid for, it might be higher than you might like. So those are just some factors to think about. But that's what I'm gonna do. I'm jumping in Friday or Monday, and I'm in it for the long haul. If you want to take advantage of this opportunity with these cheap prices, again, remember the stuff that I just mentioned, and additionally, be prepared for the long haul. We're overdue for a crash. We are overdue for a crash. The market cannot just keep going up and up and up and up. That's just not the way it works. Greed makes people want to ignore the fact that this can't continue, right? It has to reverse. Is now the time for that to happen? I don't know. This could be temporary because of the news, or well, it actually could be that and other things. It could be temporary because of the news, but it's also going to be the catalyst to lead us into something more long-term, right? So, it could go either way. This could be a long-term downtrend, or this could be a temporary thing. I'm really tired. Long hours this week. This could be a temporary thing, which therefore means a lot of opportunity to make a lot of money real quick. But I'm in it for the long haul. I'm ready and prepared for me to be wrong about this and for me to buy at a really supposed low price on Friday or Monday and then have it drop even more, 5%, 10%, and then be in losses for months, a year, or years, right? That's where we're at. High risk, high reward. But if things don't go that way, this would be an excellent opportunity to make a lot of gains really quickly. And that's what I'm going to look to do. Anyway, thank you for watching. Hope you enjoyed the video. Any comments, let me know below, questions. And let me know what you guys are going to do. Are you going to jump in? Are you going to get these discounts? That's all I have, guys. I'm super, super tired. I did like 18 hours yesterday. So, yeah. Past my bedtime. Dobre noche. Wie geht's? A doma. Ciao.